The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
The market implications of a political black swan. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. The Dow at a record. Thank you to Goldman Sachs and Apple. We will get to whether or not the S&P can notch that record as well.
Yeah, some decent earnings coming out of the banks too.
Yep. All right, let's get to the S&P, up 0.4%. So it's been waffling between a record high and not so far for the end of the close. We're looking at 38 if it can notch that record high. The outperformer, though, has been really striking. Again, the Russell 2000 up a full 2 percentage points, despite the fact that the NASDAQ as well as the S&P are off their highs of the session. The Russell is really not. And we're seeing broad-based selling on the back end of the curve as well. We'll get to that in just a moment, with the yields up on the back end by about 4 or 5 basis points. And gold also at one point hitting another record high, along with Bitcoin having a monster move as well, Romaine.
Yeah, we're talking about that big repositioning around that so-called Trump trade here. And of course, this is that sort of cross-asset move that we've seen all day long. It put the 30-year Treasury yield back above the 2-year for the first time going back to January. Gold briefly reclaiming that record high, just briefly. And crypto right now rising the most in about 2 months. Additional bids into a lot of stocks, including managed care, gun maker, and oil stocks, as well as sell-off in solar companies, EV makers, and the Mexican peso. We're also seeing bids into some of those bank stocks that she was just referencing. Speculation that if Trump wins, the regulatory constraints of the Biden administration may actually be lifted. That trade also getting a lift from earnings out of Goldman Sachs, which beat expectations for fixed income revenue, and over at BlackRock, which reported record assets. More bank earnings tomorrow, including from Morgan Stanley, PNC, and Bank of America. Now, whether those banks get any help from shifts in interest rates remains to be seen. Fed Chair Powell speaking earlier today at the Economic Club of Washington, saying that the most 3 recent readings on inflation give the Fed confidence that prices are headed back to where they want them, and says if there was to be an unexpected weakening in the job market, that could be grounds for the Fed to react.
On inflation, in the first quarter, we didn't make any more progress. The second quarter, actually, we did make some more progress. We've had now 3 better readings, and if you average them, that's a pretty good pace.
That was Jay Powell. Really, you could argue maybe nothing burger, maybe one might call him boring today, but that's just what he wants. One thing that's really caught the market in its stride is what we're seeing in the bond market and sort of the steepener that we've seen. It depends on what kind of steepener. We'll get to that in just a moment. And here you can really see it. So you have the 2-year yield is that white line. The yellow line is the 30-year yield. And that's where you wind up seeing the disinversion. We haven't seen that, which means the 30-year yield is higher than the 2-year yield. Haven't seen that since January of this year. Do we also wind up seeing it with the 2s and the 10s, and kind of how that winds up re-rating? And the question is, does it come because the front end is being bought and so yields are lower, or because the back end is being sold and yields are higher? Today, we get that bear steepening and sort of the repercussions of that, whether in the political or the economic side, Romaine.
Yeah, right now that 2-year, 30-year breaking out to the upside. Diane Jaffe helping us kick off the show here on this Monday afternoon, Senior Portfolio Manager over at TCW. All right, and let's start with it, Diane. Everyone's talking about somewhat of a repositioning around the prospects of how the U.S. election might shake out in November, based, of course, off the events that we had this weekend. Let's start with what we've seen on the yield curve here, because that seems to be where a big part of this trade is playing out.
Absolutely, and a positively sloped yield curve is really great for financials. I mean, that's really what you want to do, is have a positively sloped yield curve, and that will be great for financials. What we're also seeing, which has been a death trap up to now, is the regional bank index moving. And I think that a lot of people have been avoiding them for very good reasons, but now the game is afoot.
Is this about the economic conditions? Is this about the corporate fundamentals, or is this a little bit more about the potential easing of some of the regulatory constraints, or at least perceived regulatory constraints that are out there right now?
I think it's a couple of those things. I mean, the Powell's comment today really was a game changer, right? He thinks we're well on our way. That is a very big difference from even last week. So the inflection in the yield curve is going to be positive for banks. And then, of course, the events over this weekend, make it more likely that Trump does get to be president, and then, of course, he doesn't really like regulations too much, and that will be a beneficial to a lot of the banking industry.
What about small caps? Because small caps have had a run of the last 3 days, regardless of what was happening in D.C., and it feels like the big question is that run sustainable, or do you need to fade it?
I think you should fade it a little bit, and the reason is it's very illiquid. right? The small cap universe is so illiquid. So any move is going to be, pow, much bigger in terms of how it feels. Now, don't get me wrong. We love small cap, mid cap stocks, and we think there are great companies there. But they are, right now, they're being used as a measurement tool for companies that need lower interest rates to finance their costs.
So within, say that, is it still going to be the growth versus value trade, or is the value trade going to wind up taking over?
Well, I definitely have a bias.
I don't know, or both.
Yes, I mean, one of the things that struck me was that if you looked at the price PE expansion ratio for the largest 6 tech stocks, it was actually less than the earnings growth for the largest 6 tech stocks, meaning that earnings growth is actually being underpaid over the last quarter or two for these big tech stocks. And I think you have to pay, I tell all our interns, pay attention to the second derivative, the slope of the curve. And if you're not getting paid for those monumental earnings growth, right, because you think it's going to continue down, you got it, that means something.
And you think that is what we're going to see as this earnings season picks up?
I do. I mean, and it's not just me. A lot of analysts are saying that while the earnings for these powerful companies are going to continue to be great, the year-over-year math is just that it's not as good as it was 2 quarters ago or this quarter.
But is that just going to be about the comparisons, or if there is a fundamental softness going on right there? And I'm sorry, we just need to interrupt this conversation for a second. We are getting some political news, this involving presidential candidate Donald Trump, saying that he has picked his vice presidential candidate. He has selected J.D. Vance, the senator from Ohio, as his running mate. Of course, the RNC convention, the Republican National Convention, kicking off in Milwaukee today. Trump's scheduled to speak several times during this event, but of course the main event will come on Thursday, of course, with his formal nomination and the unveiling of his vice president pick. Alex, J.D. Vance, the Ohio senator, now selected to be Donald Trump's running mate.
Yes, and it was quite interesting in terms of the tone then, because J.D. Vance over the last couple of days has come out and talked and blamed the Democrats as well as President Biden for the attempted assassination of President Trump versus President Trump's own rhetoric, which has just been much more around unity. And so you have to wonder then, does the campaign stay with unity, or does it continue to fracture, or does it do both?
I think we're going to find that out in a big way over the next 3 or 4 days, depending on the rhetoric. It also gets to the idea, too. I mean, a lot of presidents, of course, pick a running mate who can actually deliver votes as well. That's a big part of why you pick him. Obviously, he represents Ohio, obviously a very important state. If you want to get elected in this country, you pretty much have to win Ohio, and maybe J.D. Vance can deliver that for him.
Yeah, and also when you take a look at, say, who's going to decide the election, as you point out, I think I read a great stat over the weekend that's 6% of people in 6 states, and Ohio, as we know, is one of those states. And as Romain was just mentioning, that breaking news that J.D. Vance will now be former President Trump VP pick as the senator from Ohio. We'll see if there's a market reaction. We'll see how we wind up taking that, and we'll see how the rhetoric continues over the RNC over the next 4 days.
I am curious, though, too. I mean, we talk about sort of how we got to this point. I mean, obviously Marco Rubio's name was floated out there from Florida. I think Nikki Haley was kind of briefly, and a couple other folks here. And it gets to the question as to why you select someone like J.D. Vance. There was a lot of talk that maybe Trump might want to go for a woman, or might want to go from a state that maybe he couldn't carry on his own as a way of, say, maybe blunting the impact of Biden. But obviously we know Vance has had a pretty remarkable rise from, of course, his book was A Hillbilly Elegy, and of course the movie coming out of that, writing that to the U.S. Senate, and now potentially writing that all the way to the executive office right across from the White House.
There was some narrative over the last 24 hours that potentially Nikki Haley could be more of the front runner for VP, or just in the race again in a way that she might not have been before for vice president. Again, to circle back to that message more of unity and coming together versus more polarizing conversation, which again is what we heard from J.D. Vance over the weekend. So it will be interesting to see how, again, that evolves over the next few days.
I'm also interested in seeing the polling as well, kind of like how these two together stacks up against presumably Biden-Harris, although we know that's still potentially up in the air as to who that duo might actually be, but to see how they stack up against each other. Once again, the breaking news right now, former President Donald Trump, the presumptive front-runner, the presumptive nominee, I should say, for the Republican Party's presidential ticket, has now selected his running mate, J.D. Vance, the senator from Ohio. Let's go out to Kaylee Lyons, who I believe is on the ground out there in Milwaukee for our co-host of Balance of Power. Kaylee, I guess this isn't a surprise. We've seen J.D. Vance's name really start to bubble up over the past few weeks and months here. What does a Vance Trump ticket bring to this that a different running mate would not have?
Well, in selecting Senator J.D. Vance, Romaine, in some ways, Donald Trump is selecting the vice president most like him. J.D. Vance, of course, relatively new in the U.S. Senate. He was only elected in 2022, began his term in January of last year, is a populist. He very much espouses a lot of the populist rhetoric that we hear from Donald Trump. Of course, his best-selling memoir, Hillbilly Elegy, which came out in the aftermath of Trump's election, many saw as something that explained how the Trump effect happened in America, as he grew up in a manufacturing town in Ohio, where his family was plagued by issues of drug addiction and just a lower income existence in which he saw many people around him struggling. And so that populist aspect is really what J.D. Vance is going to be bringing to this ticket. In many ways, J.D. Vance would be the most direct continuation of potentially of a Donald Trump presidency as vice president if he ever did indeed need to ascend to the presidency. J.D. Vance, of course, sits on the Senate Banking Committee. He has a history in technology, specifically on the West Coast, close associations with Peter Thiel, who helped fund one of J.D. Vance's venture firms when he was a venture capitalist still before he began his political career. So this is someone with close business ties, with access to money, which is important, and of who, of course, exposes a lot of the values that we hear Donald Trump talking a lot about.
Kaylee, can you walk us through a little bit about what this process was like to get to the decision of J.D. Vance?
It was extended, and Donald Trump wanted it to be so. He had in just recent days described this as a highly sophisticated version of The Apprentice. He had made it known that he wanted to announce this here at the convention, not let it leak out beforehand, as he thought it would improve ratings and excitement. This was an extensive process. The list went from being potentially dozens long down to what we understood was J.D. Vance, Marco Rubio, and Doug Burgum. Obviously, those last two have been informed they are not the vice presidential selection, but Donald Trump really did take his time with this, and we all had this question of whether or not the events of this weekend, the attempted assassination at that rally in Pennsylvania on Saturday, might actually change the former president's choice, in that he was very much faced with his own mortality. He says that he's now going to be talking much more about unity, and frankly, J.D. Vance, the senator from Ohio, is not necessarily who you might think would be the unity vice presidential candidate, as he has been known to be an attack dog for former President Trump. Yeah. He is very comfortable in front of cameras, protecting Donald Trump and being quite aggressive, and some thought that Donald Trump might not be making that kind of selection in the aftermath of the events of the last 48 hours.
Yeah, and it's interesting too. I mean, we should point out there were a couple of social media posts by J.D. Vance that were far from a unifying message in the wake of that assassination attempt of Donald Trump. I am curious here, Kaylee, that once we do actually see these two men together, obviously this week at RNC, but more importantly on the campaign trail after that, are the similarities between them, are they too close? Did he need to maybe pick somebody who provided variance, or is that not going to matter for the voters?
Well, it's such an interesting question, Romaine, because you're exactly right. And in Senator J.D. Vance, he is not only picking another populist, but another white man, granted one who is significantly younger than him right now. Senator Vance is only 39. He turns 40 in August, so in some ways he is the newer version of Donald Trump, if you will. But he doesn't necessarily appeal to any specific demographic that Donald Trump wasn't already appealing to when it comes to his base. He obviously is not a person of color. He is a man. Those were kind of the decisions we thought might inform Donald Trump's vice presidential selection. And I would also point out that this selection was made, this ticket, what will be Trump and Vance 2024, has likely been pulled against just a Biden-Harris ticket, what we have understood the Democratic ticket would be. And for all of the events of the last several days, which have taken kind of oxygen away from the conversation about whether Joe Biden will be continuing forward as the Democratic nominee, it is worth considering how a Trump-Vance ticket may counter another ticket if we don't see Joe Biden leading that, though, of course, Joe Biden is maintaining he is staying in this race.
More certainty leads to more uncertainty at the end of the day. Kaylee, thank you very much. Kelly Lyons, Bloomberg Balance of Power, co-host on the ground in Milwaukee. Joining us here on set is Stefan Selig. He has a long career on Wall Street and has served as the Undersecretary of Commerce for International Trade at the U.S. Department of Commerce under President Obama from 2014 to 2016, and he joins us now. Just to react to the breaking news here, what do you make of a Trump-Vance ticket?
Look, I mean, I think that he didn't pick a person of color or a woman is not surprising. One thing we know about Donald Trump is he dances to his own drummer. And so I think trying to follow conventional wisdom or things that would be traditional political considerations for many candidates really is not particularly relevant for the ex-president.
What we've seen today is very much, in the beginning at least of the day, a Trump trade, like throughout the markets. it seems to be continuing despite whatever VP pick President Trump has. What do you think of that kind of instant reaction in the market that's looking for, President Trump in the White House, and we're hearing more and more about a Republican sweep as well?
Alex, I think, first of all, the ex-president hasn't put together a very kind of clear and coherent set of policies to really base any potential Trump trade on. So we're really kind of all doing this a bit in the dark. But clearly taxes are likely to come down. Immigration policy is likely to be more restrictive. Tariffs are likely to go up. People will be tougher on trade. Spending will go up. All of those things are clearly expected to be inflationary, which is going to obviously steepen the yield curve and strengthen the dollar on the one hand. On the other hand, I personally am a little circumspect about any real long-term trade, because the one thing we've seen with this horrific shooting is, the uncertainty and volatility that we find in this environment. So what we're betting on today may not be particularly relevant tomorrow. And in fact, I kind of have a kind of countervailing point of view, which is, in fact, if the sympathy that the ex-president is now garnering and his show of defiance and strength makes him a more likely winner in the election, that may actually force the Democrats and President Biden's hand and make it more likely that he steps aside and we have a different ticket, which may actually be a more successful and a very, very different counterpoint to ex-President Trump.
I am curious, though, particularly on the policy front. I mean, even if we do get a somewhat changed Democratic ticket here, you mentioned all those things, trade, immigration, some of those issues. Some of those issues aren't totally different than what the Democrats want. I mean, at least based on the numbers, have actually deported more people than you had under the Trump administration. Some would look at the trade relationships and saying Biden, of course, he had a chance to scrap the Trump tariffs, and he decided to stick by them here. So is there enough, I guess, nuance or daylight in between those two policy positions that voters, and more importantly, investors, should actually even care about?
I think, Romain, that's a very good point. So just take trade, for example. I think the single thing that Democrats and Republicans tend to agree on in Washington today is getting tougher on China. And that's not going to change dramatically. And in fact, all the tariffs that President Trump put in place, Biden has largely left in place. And Trump is talking about much more extensive tariffs. I'm not sure that's not Trumpian hyperbole. But the fact is, there is going to be a much tougher relationship, regardless of the administration, with China. And I don't see either party getting really tough on debt. And government debt is going to increase. I don't see any world in which defense spending is not going to go up. And so all those things, I think, are likely to be inflationary going forward.
I am curious, though, too. I mean, and obviously you have a big background in trade. And when we talk about the relationship that the U.S. has with the world, that was probably one of the bigger changes that we had going from a Trump administration to a Biden administration. Even though their policies may have been similar, there was certainly a different approach with Biden. When you're talking to folks, or more importantly, when you're trying to advise folks, whoever wins this election, what is that relationship with the U.S. and China, the U.S. and Europe, the U.S. with the rest of the world? Does that improve, or is it just going to be about the same?
Well, it certainly changes, right? And so the unipolar world that we lived in for most of the last generation isn't that anymore. And so I think businesses are trying to figure that out. And when I talk to CEOs across industries, I think the one thing it is clear, which is the geopolitical world that existed over the last 25 years is not likely to be the same world that we are in the next 25 years. And as a result, strategic planning is going to be very different.
Stefan, we appreciate it. Thank you for your patience. Thank you for coming in and chatting with us. Stefan Seilig, founder and managing partner over at Bridge Park Advisors. Again, that breaking news, former President Trump picking Ohio Senator J.D. Vance as his running mate. More ahead on the close. This is Bloomberg.
This great party was founded down the road in Ripon, Wisconsin, and
All right, let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations, and we start off with Netflix. Morgan Stanley lifting its price target to $780 from $700. Expectations of a strong second quarter report out this Thursday afternoon. The analyst says Netflix in a league of its own for its strong international content offerings and the depth of consumer engagement. Shares up 1.5%. Next up, let's take a look at Apple. Another upgrade, this time to buy. Over at Loop, the analyst saying Apple's generative AI playbook for the iPhone is going to turn it into a, quote, base camp of choice for the technology. She sees AI driving material iPhone build and demand increases over the next 2 years. Apple shares at a record high. And finally, casino giant Caesars Entertainment, a downgrade today to negative. This over at Susquehanna, saying when stacked up against rival MGM, the analysts say Caesars simply underperforms. He says the casino's property portfolio is at a notable disadvantage as well, and any efforts to invest in its regional and digital segments highlights a growing disparity between Caesars and its peers. Those shares down 1% on the day, and those are some of our top calls. We want to turn now to a couple other movers on the day, including the bank stock. Shares of Goldman Sachs have been all over the place, higher on the day right now by about 2%. This after you saw some encouraging signs in their fixed income and equities trading revenue in the most recent quarter. Still, the lender did pocket less in fees from its merger advisory operation, where it usually leads the charge. Let's get some insights on this from Jason Goldberg, Barclays senior analyst. He currently has an overweight rating on the shares. All right, Jason, there was some good, there was some bad in this report here. Let's start with the good because investors seem to be seizing on that. Trading revenue up in the quarter.
Certainly a buoyant market for trading results. You have kind of election uncertainty across the globe, creating volatility across equity markets, currency markets, rate markets. And you've seen the banks take advantage of that this quarter with trading revenues up, almost double digits year on year, with both, FICC and equities benefiting. So you've seen, pretty strong trading results over the last year or so. And that seems to be continuing to this quarter. And we think the back half of the year could also be pretty strong.
Is that because you expect increased volatility that would aid that, increased activity?
Exactly. There's just, I think a wide range of possibilities across elections. Look at our country and other countries, as well as what the Fed's going to do, what various currency markets are doing, and that just keeps investors engaged.
Where does that leave Morgan Stanley? Because what's so interesting is that if Goldman Sachs is first in equity trading and JP Morgan's now number 2, what happened to Morgan Stanley?
Yeah, the report tomorrow, we expect, fairly strong trading results out of them, as well, while you'll, likely see some seasonal weakness sequentially. We do look for, probably, close to double-digit growth out of them as well.
So will they still rank high then in equity trading? Will they still, beat Goldman Sachs, JP Morgan, or what?
Yeah, we'll see. I mean, there's certainly, the big three in equity trading is Goldman, Morgan Stanley, and JP Morgan, in part benefiting from very strong prime brokerage operations across all three of them. And I think all three ranked top 3 last quarter, and we expect this quarter to be no different.
Let's talk about that M&A business, Jason. Now, obviously not the best quarter, if you will, for Goldman, not necessarily an awful quarter, but is this something specific to Goldman, or is this more of an industry-wide issue and we're still waiting for that real rebound?
Yeah, no, M&A is kind of the one weakness you've seen kind of across the board. You've just seen subdued activity. You've seen a pickup, but nowhere near we've been historically. I think there's a fair amount of uncertainty on the regulatory front. And you've seen, some of the, private equity players, slow to move off the sidelines. However, looking out, we do think as we get some confirmation around some of the uncertainties, whether it's the election, whether the outlook for interest rates, we do think M&A activity is poised to pick up, really across several sectors as companies just see an impetus to, grow both organically as well as inorganically.
Hey, Jason, before we let you go, I mean, Goldman Sachs sitting at a record high, banks doing tremendously well. What do you think the regulatory environment is going to look like after the election?
Yeah, certainly there's a lot of questions, at the moment, particularly around the upcoming capital rules. However, recent commentary out of the Fed is, to expect broad and material changes around their Basel III capital proposal they put out last year, which at first glance was going to be pretty onerous, particularly on the biggest banks. And now, in all likelihood, I think irrespective of the election outcome, will likely be rolled back somewhat, and the bigger banks should benefit from that.
All right, Jason, we appreciate it. Thank you very much for jumping on with us. Jason Goldberg over at Barclays. It is interesting, too, if we just take a look at the consumer side. Like, clearly they still want deposits, like through Marcus, but it feels like the drama surrounding all the consumer side, maybe we can put that past Goldman for now.
Yeah, I think they've moved on, clearly, or at least investors have told them to move on. Yeah, you hope so, but who knows if they re-up. The interesting thing about it, too, I thought the question of how you extrapolate that into Morgan Stanley tomorrow. We also get Bank of America, though a slightly different complexion of a bank there. But are these sort of things that are ailing them, are they really that widespread, or are they very much more specific to Goldman?
Yeah, that's a really good point, too, particularly as we wind up sort of inching towards those Fed cuts, how that affects net interest income across the board. All right, coming up, much more again with that breaking news that former President Trump chooses Senator Ohio J.D. Vance as his running mate. This is The Close on Bloomberg.
We need to do the review of this in a calm way. I think do it quickly as well, because there are already conspiracy theories about what happened on Saturday that I think are Looney Tunes, but I don't think they're going to go away until we have an independent, objective review.
Former U.S. National Security Advisor John Bolton, 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. You're still looking at an equity market still holding up relatively strong despite the turmoil within the market as well. Of course, that recent news that President Trump has picked Ohio Senator J.D. Vance as his VP.
Yeah, and that's had a big effect on the markets today. A lot of repositioning around the prospects for what the November election is going to bring us.
Yep. And speaking of, Homeland Security Secretary speaking just moments ago, saying that adjustments are now made to former President Trump and President Biden's detail. Now, this comes as the U.S. Secret Service is under intense scrutiny after this weekend's assassination attempt. Joining us now to help put this into perspective is Charles Marino, former senior law enforcement advisor to the Secretary of Homeland Security and author of Terrorists on the Border and in Our Country. It's a pleasure to speak with you, Charles. What happens now? How do we determine where the security lapses were and where the fault is, whether it's a security detail, whether it's local law enforcement? How do we start thinking about this?
Yeah, so the detail that you mentioned are the ones that were closest to the former president. The protective detail are the ones that are assigned to him each and every day and are the ones that responded immediately and covered him. The Secret Service also has teams that come in and support an event. It all starts with the site agent going out and doing an assessment on the overall area to include identifying and mitigating potential threats, like the building that the shooter went on the roof of. And then they create and they implement an overall security plan that includes state and local law enforcement supporting. You've got 3 rings of security: an inner, a middle, and an outer ring, the outer perimeter where this building fell. My understanding is that local police support was requested to cover that building to make sure that nobody accessed the roof because it was identified as a potential threat during the advance process. That obviously failed and did not happen. And as a result, we had a catastrophic failure of the overall security plan, causing that inner ring of security, that protective detail that you mentioned, to have to respond the way they did and have the counter snipers eliminate the threat.
I mean, I'm sure you've seen the video that posted on X, the really damning video of regular people with their iPhones shooting the roof of that building and someone crawling up that, and sort of the interview with BBC about the individual who saw that happening. I mean, how unusual is it for something like that huge hole?
Yeah, look, it's not only are they responsible for creating the plan, they're also responsible for implementing the plan effectively. Just because something is within the outer perimeter doesn't mean that the Secret Service can walk away from it. They've got to make sure that the plans they've put in place are actually implemented, and a building like that is covered, especially with the distance that it was, less than 150 yards, and the direct line of sight that it has. So you've got to see through the totality of this operational security plan. You can't just leave it to luck and hope that the local law enforcement officers are going to follow through and do it. Look, Secret Service is going to take a hard look at themselves. They're going to have to. And there's going to be other agencies like the FBI, who's conducting the investigation on the attempted assassination, and other groups. You've got Congress calling for an independent commission now. You've got hearings already called on Congress. There's going to be a lot of people judging exactly how the Secret Service performed that day, and can they continue to do the job effectively.
I am curious, though. I mean, what is the result of that going to be? Because we talk about previous incidents, obviously nothing as severe as this, at least in recent history, but we've had incidents during the Biden administration, incidents during the previous Trump administration. There was that incident with Obama where you basically had someone with a weapon get on an elevator with him. These are all lapses in Secret Service that have all led to other congressional hearings. And I know that this time will probably be a lot different, but what can be improved realistically that will make sure that something like this, at least realistically, doesn't happen?
Yeah, they're going to be looking across multiple buckets, not just what happened that day. They're going to be looking at hiring. Does the Secret Service have the personnel that they need? They're going to be looking at training. Are they getting, and do they continue to get state-of-the-art training that covers all of these things that agents need to do? And then the operational plans. Are all of these protective details running at a level that they should be running at, considering the current threat environment? So what you want to have happen in a nutshell is that the agency comes out stronger, has the resources that it needs going forward. Now, I can tell you, ever since the Secret Service was brought into the Department of Homeland Security 21 years ago, resources have been tougher to get. Budgets have been tougher to get because you're now going up against so many other components like CBP and the Coast Guard and ICE, whereas prior to September 11th, the Secret Service fell under the Treasury Department and had everything that they needed.
But do those folks understand the importance of what these folks do? And I know the Secret Service is a sprawling agency, and they have a lot of other responsibilities beyond just protecting presidents and other important government officials. But I think all of us watching that, no matter what you thought of the man himself, were horrified because that was effectively a dent in our democratic process. And it's important that the Secret Service and the folks who are protecting these candidates, whether it's Trump, Biden, or even some of the lower level candidates, third-party candidates here, have enough protection to get through this election cycle and let the people decide who they want, not just, some nut job on the top of a roof.
No, I agree with you. And look, there's nobody more devoted to the mission than the men and women of the Secret Service. I mean, we literally saw men and women throw their bodies over that of the former presidents to protect any more damage from occurring or even potential death from occurring. So there is a dedication to mission. I assure you that this failure will expose other failures. I expect to hear a lot on the side of communication that failed, regarding the potential threat that local officers were alerted to, that they were looking for, that immediately couldn't be found. And we're going to look at why wasn't that communicated in a way that it needed to be. So it's going to uncover a lot once you're under the microscope. And you want all of this to be fixed. You want the Secret Service to be supported because, as you point out, not only is it important to keep these candidates, these presidents alive, but it's also important to overall democracy of the country.
All right, Charles, really appreciate you taking time for us. Charles Marino is a former senior law enforcement advisor to the Secretary of Homeland Security, a wealth of experience in the world of Secret Service. As we continue our coverage here of the fallout from the assassination attempt on Donald Trump, we should point out that the former president has now been officially nominated by the Republican Party to be on that ticket as the RNC convention gets underway in Milwaukee. When we come back after the break, we're going to take a closer look at what's moving in the market, and one of the bigger movers on the day is Macy's. Those shares down the most in about 4 years after the retailer decided to go on its planned turnaround alone. That's our stock of the hour, and it's up next. This is The Close on Bloomberg. Time now for our stock at the hour, a closer look at Macy's having the worst day going back to August of last year. This after the company said a buyout offer from Ark House and Brigade Capital wasn't, quote, actionable proposal because it doesn't have sufficient funding. Bloomberg's Abigail Doolittle joining us right now to talk a little bit more about a deal that, of course, Brigade and Ark House really pushed hard for. And, of course, Macy's got a lot of criticism for not taking it seriously early on. They eventually did take it seriously. They started their due diligence. And according to Macy's, they're saying the money just isn't there.
Yeah, the money is not there, and that's one reason that it's not a quote-unquote actionable proposal. It should be noted it was offered a day late, which is also sort of an interesting side note in terms of the seriousness of it. But what makes it interesting in terms of not being getting the financing that could really work is that Macy's offered them a ton of information, far more than you would typically need to offer to be able to get financing. So the fact that they couldn't get it with certainty is a problem. I would say that the bigger issue here, though, around this proposal was price. Because if you break down the way that these sorts of deals happen, it's usually for the real estate. So our analysts are saying that Macy's real estate is worth about $8 billion. This offer of $24.80 per share, $9 billion, not that much of a value for the actual retail. You could probably value the retail somewhere between $1 billion and greater than $3 billion. You put all of that together, it's just not worthy to them. So they're saying they're going to do the turnaround on their own. They're going to, you're the look, how are they?
Oh, I gave her a look. I was like,
yes, closing the stores, on-trend fashion, greater display. Apparently, Bloomingdale's has done much better relative to display. But yeah, it's going to be a tough road. And what really stands out is this fall. It signals the degree of surprise. Investors, not analysts, but investors really thought it was going to happen, and it certainly is not.
To be fair, I don't know that much about Ark House and Brigade, to be honest. Do they have a lot of experience taking companies private?
So that they don't, and that's another factor weighing here. So Ark House, they've made investments in 2 different REITs, which is interesting because, of course, the real estate factor, preferred apartment communities and community property with the intent to buy, and then they got outbid. So they don't have that experience either. So when you put all these different pieces together, even though, to your point, Romaine, in the beginning, people were saying that Macy's should look at it a little bit harder, this offer really just didn't have it.
Well, and then now it creates the question as to what is the future of Macy's. If Ark House and Brigade aren't there to save this company, and there are no other bidders at least that we know of publicly here, that's kind of leaving the company up to its own devices. And I mean, it gets to the point about the valuation, and I think to Alex's point as well here is what exactly are we supposed to value?
Well, it's the real estate is the big value. So the real estate on its own is worth $8 billion, and then with Macy's in the stores, without, if they were quote unquote dark, it's worth $5.9 billion. The retail, it's interesting, the component itself, again, $1 billion to $3 billion. But I think the idea is, or what they're saying is, they are going to execute this turnaround themselves. They are going to restore Macy's to the brand that it once was. They're going to continue to keep Bloomingdale's. Whether or not they do it, well, that's a different story.
Because they have the Blue Mercury, right? They have Bloomingdale's. Like, those are the valuable parts as well. All right, Abigail, thank you so much. Really appreciate Abigail Doolittle joining us there. Macy's stock down about 12%, but I should point out, definitely off the lows of the session. And remember, there's going to be more competitors too, Romaine, right? Like Saks Fifth Avenue owner Hudson Bay is looking to buy rival Neiman Marcus. Like, you're laughing, you don't like it.
Well, I'm laughing just because, I mean, they've been in this conundrum for a while, long before Ark House and those came along here. And look, we know that they're doing it. They put out that big plan. Stony Spring has made it clear. They've already started to revamp stores and test new ones. But you can see just by the market reaction, investors really thought that the future of this company was going to be better in the hands of someone else.
Yep, and not quite there yet. All right, coming up, we're going to continue to count you down to the closing bells. Garrett Melson, portfolio manager over at Natixis Investment Managers Solution, will be joining us. If I just take a look at the S&P here, we are still higher on the day, off the highs of the session, no longer at a record. This is Bloomberg.
Welcome back to The Close. Romaine Bostic here alongside Alex Steele. 10 minutes until we get to those closing bells, Alex. Green across the screen, but we are near the lows of the day for some of the major indices.
Yeah, so S&P not at a record anymore, so we may not get that 38th record for this year. The Dow, though, still at a record. Thank you, Goldman Sachs and Apple, making up about 100 points to the Dow. Financials, though, one of the outperformers, Romaine, which is quite interesting. And the Russell 2000, yes, we're off the highs, but continues to grind its way higher.
Yeah, and it was something like, I mean, we've had several days of this outperformance with the Russells versus the S&P and, more importantly, the NASDAQ here, something we haven't seen in months. Now, of course, as we were talking with Diane Jaffe a little bit earlier, the big question is how sustainable is that?
Yep, and a lot of analysts coming out like Lori Calvasina of RBC saying you got to get through the growth soft patch, and then maybe you can have a sustained move into the value trade.
We heard from Jay Powell a little bit earlier, particularly on that topic. Let's get some insights out of our next guest as we count down to those closing bells. Garrett Melson joining us right now, portfolio strategist at Natixis Investment Managers Solutions. Garrett, I mean, we talk about this idea of the growth story and the growth backdrop, the economic growth that is. Sure. And I think to a certain extent that did help to fuel the large cap rally we saw, but it didn't necessarily help out the small caps until maybe the last, I don't know, week or two. Right. Is that sustainable?
Yeah, I think the biggest issue has been we're in a tighter policy backdrop. So yes, you've had a pretty significant repricing of growth expectations entering the year, just 1% consensus for 2024 real GDP, and we moved all the way up to about 2.5 by the end of the first quarter. So pretty significant. But I think the issue has been obviously the Fed and kind of a higher for longer backdrop. That continues to weigh on financing, which certainly is much more important for these smaller cap companies. I think that was a big story for weighing on that performance for the first part of the year.
But when you listen to some of the comments that Jay Powell made, and particularly today, the interview we had with David Rubenstein, he seemed to kind of touch on this idea that the Fed is a lot closer to cutting rates than it is to holding them, or more importantly, even raising them here. Do you have confidence here that we will start to see the start of that rate cut cycle this year? And if so, how much of a tailwind could that be for stocks?
Yeah, absolutely. First, I would say, I think the crystallizing moment for the market was that CPI print on last Thursday. We've known that the rate cutting cycle is coming, but it seems like it constantly has just gotten pushed out and pushed out. And so a lot of investor hopes have been dashed. I think the Thursday print was basically the moment where the market realizes and kind of has that aha moment. Cuts are imminent, and it certainly seems like the Fed will be setting up, not for the July meeting. That's going to be kind of, sowing the seeds for that September meeting for the first cut. In terms of the growth impact, I think it does help, but I view it more as a risk management exercise. That's essentially what the Fed is. And so managing some of those downside risks to help stabilize conditions where they are right now, I think that's a bigger story. And I think you've already kind of seen the market price that in, especially when you kind of look at the strip moving out into early next year, pricing in about 5.5 cuts by June of next year.
If I'm just looking at the indices today, energy, financials, industrials, they're all leading the way higher. That feels like, okay, that's a value play. Putting small caps aside for a second, does value within the you're laughing at me, does value in the S&P get a real sustained bid?
Yeah, well, I mean, that's the biggest question, right? There's been so many investors out there basically waiting for the small cap trade, waiting for the value trade to really, gain some momentum. I do think there's a story for and a case for, the value complex, and I would view it more from the cyclical side of things to gain some momentum as we move into year end, and that's basically a story of rotations. It's exactly what you're seeing today, right? Some of the leaders from earlier this year starting to give away, maybe a little consolidation, and that's rotating into the laggards. And I think, again, you need to start to see growth stabilize and start to accelerate, or at least not continue to decline, and that's going to help to, I think, make a better story for cyclicals and down cap exposure.
And that, of course, goes to sort of what we're seeing with the curve and that steeper curve. Does it matter, though, why it's steeper? Like, is it the front end actually coming down or the back end going up? And does that actually matter then to how you play the value?
Yeah, it certainly does. I don't know that the curve shape itself is as important to the story, but I think it certainly is kind of telling you what the dynamics are in the marketplace. Right now, a lot of that steepening is basically a bull steepener, and it's because the front end is certainly rallying more, and we're pricing in more cuts. I'm not sure that the economy is as weak as it is to suggest that we need 6 cuts by basically a year from now. I see it as a lot firmer than that, but with some downside risk growing. So again, that's where I think the Fed and the story for cuts comes into play. It's not easing to reaccelerate growth. It's easing to just move policy back from restrictive to something more neutral. So yes, I think it's somewhat of a reflection of the sentiment in the marketplace. But moving as aggressively to the downside and steepening that much, I think it's somewhat of a reflection, without the long end moving, that maybe we're starting to get a little bit too exuberant on some of those cuts, and eventually we start to see some of these growth concerns come into the market. That's probably where you'd start to see a bid moving into the long end of the curve.
I am curious about some of the other catalysts that have sort of led to this steepening, as well as, of course, the big moves you've seen in stocks, the bid that goes into the dollar, and for that matter, into gold and a few other cross assets, which seems to be tied to bets around what the November U.S. presidential election is going to look like here. When you look at these types of moves here, whether we want to call it the Trump trade or whatever, do you think that it's prudent to be making that type of repositioning now when we're still obviously 3.5 months away from the actual election?
Yeah, it's an important question. I mean, obviously markets love to front run expectations, and they're going to move off those expectations. So, it's not surprising that, again, what you're seeing in terms of rate cuts, you're seeing some of those rate sensitive areas of the market start to outperform ahead of rate cuts. And it's not surprising that with the shifts you've seen underway and expectations around the election, that you're starting to see some of those perceived winners start to move up. I think what's interesting, though, is the overlap right now between, that CPI print last week and the occurrences basically since the end of June from that debate. And certainly over the weekend, it seems to be firming expectations for a Trump victory and maybe a red sweep. How do you disentangle those? I think that's kind of interesting to see, how much of this is actually a rate story,
right.
How much of this is actually election expectations and policy ramifications.
Does it change those broader, those structural narratives that we've had into the market? Obviously, a big push into renewables and EVs, of course, everything AI over the last year or so, and some of those other big themes. Would that really change dramatically, even if you did get a president in there who maybe had significant policy differences, but it feels like the momentum behind those, it's already kind of the cat's out of the bag?
Yeah, and I think that's part of why we're a little bit skeptical to be chasing some of this breadth expansion, mainly in the small cap space, and some of those areas of the market that might benefit from basically pricing in the outcome of the election in advance. So markets always do this. We love to over extrapolate and over exaggerate some of these moves. So it's not all that surprising, but it does feel a little bit early to be pricing in some of these as a certainty, especially when we don't have the election results in hand and we don't exactly know what the policy outcomes will be, depending on that composition of Capitol Hill.
All right, Garrett, great stuff. Great to have you on the program. Garrett Melson, portfolio strategist over at Natixis Investment Manager Solution, helping us count you down to those closing bells. Alex, just about 3 minutes to go here. Stocks at one point while we were talking, actually the S&P and the NASDAQ actually dipped into the red for the first time on the day, though now rebounding pretty strongly here as we get closer to the bells.
Yep, and volume not terrible for like a Monday in the summer. And just pointing out sort of the worst performing stocks, though, they're all solar and they're alternative energy stocks. Like, I understand you don't want to front run it, but it's clearly going to be on the chopping block. Yeah, and it's interesting to see all the oil and gas companies, I know that's close to your heart, at the top of the leaderboard for a change here. I guess maybe people think we'll be drill, baby, drill all over again as we move closer to those closing bells. Stick with us. Full market coverage coming up right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Seal, here to take you to the closing bells. It's our global simulcast. Scarlett Fu joining us in the television studio, Carol Masser and Tim Stenovic in the radio booth as we welcome our audiences across all of our platforms, including that partnership with YouTube. Carol Masser, green across the screen, another day of gains here for major equity indices here. Not the repositioning of last week, but a repositioning, apparently, around the U.S. election.
Yeah, really fascinating, right? First of all, I would say a lot of bouncing around on the equity side of things. We're definitely off our highs of this session. But yeah, we've been focused so much in terms of what's going on at the RNC and just coming off the weekend and what's to come in this presidential politics and political election. But having said that, let's not forget earnings are underway. And I'm looking at the KBW Bank Index, folks, that really is outperforming today, Tim, up about 1.6%. Goldman up even more than that.
Okay, you're watching the banks. I'm watching the return of the Trump trade because we got private prisons higher, we got firearm-related companies higher, we got green energy companies and solar companies lower, we got Bitcoin higher by 5.5%. So it seems to be, like you said, Romaine, a rethink of politically what could happen in November.
As much as there's a political shift taking place, there are some things that have carried over from last week. After the June CPI report last Thursday, the Russell 2000 has consistently outperformed, up more than 6.5%. S&P little changed, and the Mag 7 down about 4%, and that's continuing to be the case today.
Right. Trump trade or Fed trade or inflation trade, right?
Yeah, and then also sort of, do you buy into it or do you fade it? I mean, there was a lot of research notes out talking about the Russell and that sustainability of that rally in question.
All right, well, at least for this day here, you are seeing that outperformance. Let's walk you through the numbers with an S&P 500. Looks like it's up on the day by roughly about 18 points or about 0.3%, 56.32 and change here. So not a record high for the S&P. The Dow Jones Industrial Average up about 0.5%. I believe that is a record high for the Dow, up about 200 points, back to 40,212. The Nasdaq Composite up about 74 points or 0.4%. But let's take a look at the Russell, a 1.8% gain on the day, fourth straight day that we've seen it outperform the S&P and the Nasdaq. That's the first time that's happened going back to at least since late March.
All right, back to the S&P 500, guys. Almost an even split, but a little bit more to the upside. 278 names actually gaining some ground today. 225, Scarlett, to the downside.
And a pretty even split when you look at the sectors in the S&P 500. It's rare that you don't see communication services or tech or consumer discretionary at either end of the barbell among the best performers or the worst performers. Instead, you have energy, financials, and industrials leading gains. And the laggards here are really your defensive sectors. Utilities down by more than 2 1/3%. Consumer staples and healthcare, traditional defensive groups, also lower by about 0.4%.
All right, guys, to the individual gainers we go. And what's interesting is while some people are saying it's all about small caps, diversification, branching out, a lot of the Mag 7 actually outperformed at least earlier in the session. I'm looking at shares of Alphabet at its highs up 1.7%, finishing the day with a gain of about 0.8%. This is following some reports that the Google parent is in talks to buy the cybersecurity startup Wiz for as much as $23 billion. This is according to Person Familiar, based on Bloomberg reporting. So we keep an eye on that one. Apple outperforming again, up almost 3% at its highs, finishing the day with a gain of about 1.7%, closing at a record today. The tech giant named a top pick over at Morgan Stanley. The broker seeing the launch of the company's AI platform triggering a record rush among users to upgrade their smartphones, tablets, and computers. So there's an outperformer. Netflix up 3% at its highs, finishing the day with a 1.4% gain. This is after having its price target raised to $780 a share from $700 by Morgan Stanley. The analysts there are expecting strong second quarter results and 2025 growth. Netflix, don't forget, reporting on Wednesday after the close, the stock closing at $656 and change. And then, as we mentioned, the Trump trade today, had to mention Trump Media and Technology Group. DJT, of course, is the ticker. That went up about 31% in today's session, so soaring in today's trade, Tim.
Okay, you got the gainers, I got the decliners. Kind of a retail theme a little bit. Starting with Macy, shares falling close to 12%. This after the company ended discussions with 2 investors to buy out the chain, pledging to execute a turnaround plan on its own. Worst intraday performance since March of 2020, but shares did finish off their lows. The company shares fell after they set a buyout offer from Arkhouse and Brigade. It wasn't a, quote, actionable proposal because it doesn't have sufficient financing, the company said in a statement earlier today. Also, I talked a little bit about the Trump trade. Shares of solar and green energy companies falling today. Among those, Sunrun sells, installs battery and solar panels on roofs, fell 9%. Today. We did see other companies move higher, private prison operators, firearm-related companies among the stocks rallying. The other side, of course, being the renewable and greens. And then ADRs of Burberry Group. Keeping an eye on those, Alex. Shares cratered after the company said it replaced its CEO. It issued a profit warning after a downturn in the luxury industry has foiled the company's efforts to challenge high-end labels such as Chanel, Louis Vuitton, and others. ADRs are at their lowest since 2010. Worst day going back to March of 2020. Burberry announced that Jonathan Ackroyd is departing after less than 2.5 years. He's being replaced by Joshua Schulman, a former CEO of Michael Kors, Coach, and Jimmy Choo. They also suspended their dividend, said the slowdown in luxury sector sales has persisted into July. They've had 5 CEOs in a decade.
Wow. And I also don't want to pay $20,000 for a raincoat. Anyway.
Is that how much they cost?
No, I'm just, it's hyperbole, Tim. It's just the idea.
Sounds high.
I mean, maybe some raincoats. Okay, I'm taking a look at the bond market here. It's been quite an interesting day. So the back end really selling off. So that curve is steeper, but it's steeper because the back end is selling off. The last 2 days we saw a steeper curve because the front end you saw a lot of buying and those yields coming down on the 2-year. So just a change of how we're getting this steepener, and that's also quite significant in terms of what it means. You're looking at the 30-year also above the 2-year for the first time this year, and that 210 spread is now the tightest that we've seen since January of this year as well, guys.
Absolutely here. And we talk about this idea of all the sort of moves that we saw in the cross-asset space, whether it was the weakening of the peso, strengthening of the dollar, and of course the big moves that we saw in the treasury space. And I guess at some point we're going to talk about what's happened in crypto. But something I do want to talk about is a story that actually caught my eye and actually involves writing checks. I don't know, Carol, you still write checks probably in the grocery store or something, but I'm learning that Target
feels judgy, but yes, today, I do occasionally. Starting
today, if you go to Target, Carol, you're not going to be able to do that anymore. They're actually doing away with taking paper checks. You have to basically use your debit card or just cash.
It's really kind of amazing. I know, all right, we are very much a digital society. Have to remind myself that there is still cash that backs all of those digital moves that we make. But it is interesting, this era, like, right? How many times did we used to over the years, maybe, I don't know, like, buy those boxes of checks. You needed checks. People wanted a check. It's not the way anymore.
It may not be the way at a Target or a supermarket, but I mean, if you have to pay parking tickets, and I speak from personal experience here, and the processing service charges you like 20% fees, then you're going to write a check. I'll gladly pay for the forever stamp at that point.
Yeah, that's a good point. Okay, but
I'm sorry, Scarlett. Can you tell us a little bit more about these parking tickets?
Hey, sometimes it happens, guys. Okay.
Have you been clamped yet?
Do you guys remember when you were kids, though, and your parents would, like, part of the rite of passage of growing older is getting that checking account, and your parents would make you balance the checkbook? Or was this just me? Was this just me?
I had the little. I saved my passbook, or I just my mother saved it.
Isn't that that's an important part of financial independence, or like learning to be financially independent? And I don't know, with these days, you just go and put your phone on a thing and. It's
financial literacy a thing? Is it a priority right now? I don't know.
Yeah,
it needs to be.
I mean, entirely different discussion.
Presumably, you can still balance your budget without your checkbook. You can do it in other ways, but that's a whole different conversation.
Yeah, and it gets to the idea too, though. I mean, like, there's a whole generation. I think Tim was getting to it. That never has known paper checks or anything like that. I've got a box of paper checks that I probably write 3 a year, maybe, if at most. And I guess kids are just more comfortable with. Swiping their phones and doing everything else. I know the children of my household.
You know where you still need to write checks?
Where?
If your kid goes to public school and there's a trip, you need to write a check because the teachers don't want to handle cash because of.
Untrue. I Venmo my teachers.
Yeah, I Venmo
for my
my
daughter.
teachers all the
Real?
time.
Yeah, I live in Park Slope. We're hip, man.
I don't know. In Westchester, they made us write checks.
Scarlett, is there something about a parking ticket you want to tell us, or like?
I write a lot of checks, guys.
Okay.
Oh my God!
I'm not like the dude in The Big Lebowski where I'm writing like 69 cents for a gallon of milk, but I'm writing checks.
I feel like often there's a mailroom near where we sit, and there's oftentimes letters from Scarlett in the mailroom.
Yeah, you spied my letter to
are those all
parking.
just parking? Is that just parking tickets, right?
All right. I guess we're going to wrap on that one. We all sound kind of old something. I don't know. All right. Anyway, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. Folks, we will see you again, same time, same place tomorrow.
Our coverage continues right here on Bloomberg Television. Back to the markets and back to earnings. More big banks scheduled to report tomorrow. Morgan Stanley, Bank of America, PNC among them. What to expect coming up after the break. This is The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. We almost had another record high on the day, Scarlett Fu, but coming up just a bit short, 56.31 on the S&P 500, just about 2 points high from hitting, 2 points shy of hitting another record high, still a gain of about 0.3%. Similar gains across the rest of the space, so we should point out we did see meaningful outperformance in the Russell 2000. But today, Scarlett, was really all about that Trump trade. You can see it on the screen. Oil drillers getting a bid, the Mexican peso getting sold off, and Bitcoin back in favor. Quite a few other stocks also rising today on the prospect that we could get another Trump administration.
Absolutely. Let's get to some individual names and start with the company that the former president, actually owns a huge stake in. DJT, Trump Media and Technology Group, up 31%. At one point, it gained as much as 50%. Trump, of course, owns about 60% of the company, and it's become a proxy for his reelection. We're also looking at Tesla, which at one point was the best performer in the S&P 500 and NASDAQ 100 after the CEO Elon Musk endorsed Trump as a presidential candidate. And TAN, this is the ticker for the ETF that tracks solar companies, down almost 6%, sinking as Trump is seen as less friendly toward the solar energy sector. Now, in addition to monitoring the shifting political winds, we are, of course, focused on bank earnings and in particular how these firms are positioning for new capital rules. JP Morgan and Wells Fargo are selling billions of dollars of their debt at home and in Europe, in part to capitalize on falling bond yields, but also as they brace for the revised Basel III endgame rules, which might require them to hold more capital on their balance sheets. Meantime, Goldman Sachs devoted a chunk of its earnings call to explaining why it's reducing stock buybacks following its annual stress test. Romaine?
All right, and of course, we're going to get Bank of America reporting earnings tomorrow before the bell. Analysts expecting Quarterly earnings of about 80 cents a share, down from 88 in the year-ago period. Of course, also going to hear from Morgan Stanley, PNC, and a few others. Sonali Basak here to help break down what to expect. And let's start off with Bank of America, a slightly different type of bank than Goldman and some of the other JP Morgans that you cover here. What are you looking for?
Well, there are a few things. Remember, when you think about Bank of America, because they have so much money tied to net interest income as well, there are major questions for Bank of America and the other big money center banks of whether that Wall Street boom really offset the weakness in NII. We've had Bank of America previously guiding that the second quarter would likely be the bottom of that kind of pressure on NII. But how does it rebound? We're seeing, of course, that yield curve steepening. That is, of course, good for banks. You are seeing almost every bank, I think every bank currently, are at the close of today up in the KBW Bank Index, partially on that prospect, also partially, of course, on that prospect that perhaps they might face less regulation if Trump were to take the office after November. But again, those Main Street businesses have not fared as well as those Wall Street businesses as this economy cools.
Yeah, and of course, we'll keep an eye on the Wall Street businesses when it comes to Morgan Stanley. We also see more regional banks starting to report, and a big question is what happens with their commercial real estate holdings.
You know, it's interesting because you have seen this significant relief rally, particularly after you saw the latest CPI data. The banks, particularly those regional banks, have gotten a serious bid. Why? Because if you have those interest rates starting to cool, then perhaps that pain that you saw in the commercial real estate sector will be a little less bad. And so you've seen these banks start to really do things to clean up their books when it comes to commercial real estate, work with the private capital markets to clean some of that up. But yes, there could be fits and starts of pain, particularly as you've seen a lot of these stocks trade on momentum kind of as a group and investors getting into this based on the macro story rather than the individuals.
It's a really good way of putting it, fits and starts of the pain. Sonali Basak, thank you so much. Sonali Basak, co-host of Bloomberg Open Interest and of course specializes in covering the financial sector. Let's continue now this conversation with a focus on bank regulation and bring in Alexandra Steinberg-Barrage. She is a partner at Troutman Pepper, but also a former executive at the FDIC. Alexandra, thank you so much for speaking with us. Sonali mentioned that some of those regional banks have gotten a little bit of a tailwind on this idea that perhaps candidate Trump will become President Trump once again and will be a little bit more lenient on bank regulation as it pertains to capital rules. Is there reason to believe that? Has he said as much, or is this part of the whole he's looser on regulation thesis that investors have assigned to him?
Thanks so much, Scarlett. It's a good question. I don't think we've heard anything direct from former President Trump on any capital-related regulation or otherwise, but it's certainly fair to say that in terms of general trends, Republican administrations have been, compared to Democratic ones, lighter on regulation. In fact, we saw that with the last administration and the tailoring rules that impacted a number of the largest banks here in the U.S. So nothing direct. I think the more helpful and more recent testimony of Chair Powell at the Fed is more indicative of what we might see happen over the next several months on the Basel proposal. Right,
right. This idea that they are definitely working or reworking those that original proposal. If we're talking about no change for now, basically maintaining the status quo, how well capitalized are the banks under the status quo?
Well, there are a couple of different markers that we know of. First, the most recent stress tests in which the largest banks basically got a passing grade. And certainly no one would dispute that all banks in that category are well-capitalized banks. In fact, many of them exceed the regulatory minimums, if not all of them. But I think the key question for capital regulation generally is what options are currently on the table. Will we see a reproposal, an entirely new proposal, following last summer's Basel Capital III proposal from the agencies? Are we likely to see broad and material changes to that proposal? I think the answer there is yes, based on last week's testimony. So whether this will be a final rule with some changes or an entirely new rule is still somewhat in flux, but the direction seems to be pointing in favor of an entirely new rule with another comment period for the industry and other stakeholders to comment.
I am curious, though, when you look at kind of the state of the industry, I mean, particularly the argument that a lot of the big banks have made, Alexandra, this idea that they already have enough sort of capital controls, capital rules out there, and that anything other than what they have, anything higher than what they have, just really starts to become sort of depreciative rather than as additive to any sort of sense of safety, and certainly additive to their business as well here. How do you respond to those types of questions and criticisms, which, there may be some validity, at least to the outstrokes of that.
That's been a traditional refrain of the largest banks subject to these proposals for many years. And I don't think that they would take the position that there shouldn't be any capital regulation. Rather, I think the genesis of their comments are that the effects and the impacts of the current proposal are just too much, and especially on specific things impacting certain banks, operational risk and the impact to cost of capital. So it's not as if they're, as a general rule, opposed to all types of capital regulation. I just think the proposal before the banks currently is one that they've indicated they would significantly push back on were it to go final. Certainly the stress tests are a recent indicator, I think, of the capital levels at those same banks.
I have to ask you, though, just about some of the leadership, at least at the major agencies here. I mean, obviously, we're in an election season, so some of these leaderships could change, but we got a new head of the FDIC. Obviously, Jay Powell, I think, sticks around at least through 2025, assuming he serves out his term. And obviously, the Treasury head would change if we do get a new president here. But are you generally comfortable with the leadership that we have right now, and at least in what they've telegraphed publicly about bank oversight?
Well, I think that Chair Powell has been the most transparent most recently about the fate of the capital proposal. Right? Last week, he testified that in his view, a reproposal was needed. It's not clear where the FDIC and the OCC are on that, but I would expect to hear more about that in the next few months. In terms of any changes at the FDIC, Chair Bloomberg is still the chairman. He has indicated that he would step down once a replacement was confirmed. And we know that last week, Commissioner Christy Goldsmith-Romero had her hearing, but to my knowledge, that confirmation process in terms of voting has not been scheduled yet. So there are a few things that are still in flux in terms of leadership at these agencies, and certainly the election will play a role in who sits at the head. But to your question, assuming Chair Powell steps in, I would expect him to take a similar position going into next year on the capital proposal.
So Jay Powell spoke most recently about it, and you rightly pointed out the changes at the top of the FDIC. Which agency is leading the way on this? Who should we look to in terms of the agency kind of setting the tone for the proposal on bank capital rules?
I think we should continue looking to the Fed in terms of leadership on this role, but certainly the Fed is not doing this alone. It's an interagency proposal, and therefore it will be an interagency rule. So it will be important not just to get the board of governors at the Fed in line, but also the board at the FDIC, and of course the acting comptroller at the OCC. We know, because of public statements made last week, that at least one board member at the FDIC is in agreement with Chair Powell. That's board member Jonathan McKernan. So we may see, more direction in terms of an entirely new proposal and a new comment period. But still, there's some things that just remain in flux.
All right, Alexandra, I appreciate you taking time for us. Alexandra Steinberg Barrage, partner over at Troutman Pepper. A closer look at banking regulations here on this Monday afternoon as we turn our focus back to politics with the Republican National Convention just about to start. Bank executives and other business leaders were really shaken up, like we all were, by this weekend shooting of former President Donald Trump. Goldman Sachs CEO calling for civility and unity during an earnings call this morning.
It is a sad moment for our country. There's no place in our politics for violence. I urge people to come together and to treat one another with respect, civility, dignity, especially when we disagree. We cannot afford division and distrust to get the better of us. I truly hope this is a moment that will spur reflection and action that celebrate what unites us as citizens and as a society.
David Solomon speaking a little bit earlier. Joining us right now is Christina Greer, Associate Professor of Political Science at Fordham University's Lincoln Center campus. And Christina, I mean, we picked this quote from David Solomon, this idea of distrust and the idea of, I guess, the rhetoric that everyone is talking about that maybe or maybe not led to what we saw over the weekend here. This has been unfolding now for years, maybe even an argument to say for decades. Is there a sense here that what happened this weekend could try to some extent to unify this nation, if not necessarily behind the candidates, certainly around the ethos of having a political system devoid of violence?
Yeah, I'm not sure. I mean, we've been talking about the rhetoric. We've also been talking about the policies for many years, and there doesn't seem to be much agreement. The Democratic Party, by and large, has been begging the Republicans to come to the table with good forth gun control policies, and it doesn't seem to happen. After each school shooting, after each elementary school shooting, after each college school shooting, nightclub shooting, you name it. So hopefully this past incident will help Republicans understand what Democrats have been asking them to do for so many years. We also have to recognize that, the Republican Party candidate has been pretty vitriolic in his language towards Democrats and people who disagree with him. So I do hope it's a moment of reflection for everyone, obviously, but definitely for Donald Trump, who has been quite incendiary since he came down that gold escalator in 2015.
Well, and he just picked his running mate today, or at least we learned about his running mate today, Ohio Senator J.D. Vance, and we should point out, had made several social media posts, including on X, in the wake of that shooting on Saturday. That was anything but unifying, to put it mildly here. And I do wonder that if they don't seize this moment to try to create a little bit more of a sense of decorum and a sense of unity here, is that moment just past? Is there any way to sort of get that back?
That is the hope, that someone will rise above it, and someone in the Republican Party will have the gravitas to recognize that, this is either a moment where a furnace can, a fire at the bottom of the building can either serve as a furnace or can serve to burn down the building. And it is the hope of many Americans, Democrats, Republicans, independents, whatever stripe, that Donald Trump will use this hopefully as a moment to rise above it. Because if not, we do know the numbers of Republicans, especially, who are gun owners. When the former president says, "Fight for me," what exactly does that mean? Is he going to try and essentially encourage his supporters to go out and retaliate? That is and was a large fear, especially since Saturday evening. So unfortunately, it remains to be seen. We have to wait for the tone of the RNC when you have so many Republicans gathered. This really could be an opportunity to talk about policy, to talk about the future of the nation. But sadly, in the past, we've seen, after tragic events, way more tragic than what we experienced on Saturday, as traumatic as that may be, but parents losing children and loved ones in one massive incident. We haven't seen Republicans move forward on policy and making it harder for people to have guns in their hands.
I think rightly you pointed out that the fear is that there might be more calls for seeking revenge, but former President Trump has also made clear that he is rewriting his comments for Thursday when he accepts the nomination, moving more towards something about unity and less about divisiveness, assuming that he delivers on that. Does that move the needle for that portion of voters out there who might be undecided and are looking carefully at what he says to decide whether to vote for him?
I don't know if it really moves the needle. Let's be clear. His staunch supporters don't want to hear that, and they don't really care for it. We know, though, that Donald Trump can be disciplined when he feels like it, but by and large, he's not. And so he might deliver that speech on Thursday. We also know that he might tweet something that Friday morning that's the opposite of what he has just said. I think that is what, the markets are going to show, and what many voters are sort of waiting to see as we move closer to November 5th. Does this former president have a temperament to actually lead this country and not be as divisive as he has been? Obviously he and the Republican Party have said, this is all Joe Biden sort of being divisive. But there is no proof that Joe Biden has ever been divisive. If anything, he's trying to actually put policies together that bring everyone to the table. It's not the rhetoric of Joe Biden. It has been the rhetoric of Donald Trump. Yeah. And because Donald Trump has been the head of the party, it's been the rhetoric of Republicans for roughly the past 9 or 10 years.
Christina Greer is Associate Professor of Political Science at Fordham University. Thank you so much for joining us today. And of course, we are awaiting the start of Balance of Power, where they are at the RNC in Milwaukee. The events of the weekend have just turned things topsy-turvy completely.
Yeah, I think we were all shocked, of course, Saturday afternoon to kind of see all the social media sort of light up, and then of course when we actually learned about what exactly happened, and of course all the talk was sort of how the Republicans would seize on this, whether it was going to be that true unifying moment or maybe the opposite. But it certainly galvanized a lot of folks, both in the markets and in politics.
Yeah, and should be worth mentioning as well. Nikki Haley will be speaking. Ron DeSantis will be speaking. So former rivals of President Trump, some of whom were reluctant to endorse him, are now full on endorsing him.
All right, stick around. We're going to have special coverage coming up right now on Balance of Power from the Republican National Convention in Milwaukee as former President Trump picks Ohio Senator J.D. Vance to be his running mate. Balance of Power starting 30 minutes early, right after the break, right here on Bloomberg.